So in today's video, I'm going to be continuing to backtest gold using a simple 1 to 3 mechanical take profit rule. The purpose of this backtesting session is, like last time, to find the optimal take profit rule to use with the current strategy that I am using. I'm also going to be walking you guys through the full strategy and system which helped me to obtain results such as these in the live market. And if any of that sounds interesting to you guys, make sure to drop a like below this video, subscribe for more content like this, which I drop every single Friday, and let's get straight into the backtesting. Alright guys, so welcome back to the channel. As mentioned in the introduction, I'm going to be continuing the 1 to 3 risk to reward system testing on gold in today's video. So if you missed last week's video, basically what I was doing was basically finding the optimal take profit system to test on gold. I already did GBP/USD in a previous video and on my own as well. So for this video, I'm going to be back testing a 1 to 3, so a mechanical target where we simply target a 1 to 3 every single trade. And the reason I'm doing this is simply to optimize my take profit rule to see which risk to reward works the best and makes me the most profit. So I'm going to be doing the 1 to 3 in this video, but I will also continue to do a 1 to 4, 1 to 5, 1 to 2 on my own, and then find which one was optimal. But if we head over to the session now, I think last time we got up to, well, we're going to be going from December 2020 all the way up until the present date, which is currently the 19th of June. And last time we got up to almost the end of 2023. So maybe we can finish in today's session and go up all the way up until the present date. If not, that's fine. We can continue some other time. But as always, I'm going to be using the same simple system that I always use, the price action strategy, which I actually use in the live market, which I've discussed numerous times in my previous videos, which you guys can check out after this one if you want to learn more in depth about the actual strategy and the rules that I use. But hopefully this video will give you a rough idea of how I trade anyway. And I think the best way to learn how somebody trades is just to simply watch them analyze price and place trades, as we're going to do today on FX Replay anyway. So where we got up to last time, I had basically identified on the daily time frame that we had this breaker structure. Price had then come back into this area of demand down here, which was the extreme because it was the lowest point of this current range. And you may say, well, these levels here could be considered some structure, but for myself, just because of all the liquidity that built up, you can see we have multiple lows here. Price was always going to come and, sweep this area of liquidity at some point, filling in this imbalance below. But it's good to keep in mind that overall, on the weekly time frame, we were still overall bullish, and price was, creating higher highs and higher lows, making its way up. And at the moment, it looks to be targeting this previous high here. So based on this, we then went over to this internal trend. So whatever is in the screen now, from this high to this low, we can sort of identify this internal trend where we've had lower low, lower high, lower low, lower high, lower low. But once price came into the area of demand, we saw it clearly break this main structure, which was that current higher low point. So if we mark that on, and essentially what this means is just that price has now flipped back bullish internally, breaking this most recent structure. And at the end of last week's session, we had basically two areas marked on. The first was this area of demand on the daily, because after this big push on the daily, you would expect it to come and retrace, taking out some daily liquidity, and this was the area where we were basically anticipating for price to come into. And I had also drawn on this daily supply as well for a potential counter trend trade. And the reason that this area of supply was valid for myself was because this area of supply broke structure to the left and price has just taken out all of this liquidity just in here, where all of these people were previously selling from. So even if this isn't, a complete reversal back down to these lows, we're day trading, so we can still look to capitalize on a shorter term move, especially because all of this liquidity was taken out. You would expect some sort of reaction from this zone. But going on the 1 hour, what I also want to do is mark on the more intraday structures. So we can see we've had a reaction from this demand. Price then broke this high in here. So technically at the moment, the hourly higher low is this point down here. So we can't really look to sell until that is broken. So yeah, right now in the market, what I would be looking to do would be to look to buy somewhere between this low and this high after some previous buyers are taken out. And I think the last point we got to in last week's video was that I identified sort of these lows right here, and we had this clear area of 15-minute demand just below, which had also swept previous liquidity to the left. So this was the area that I was looking at buying from. Also keeping in mind that we did come into that daily supply, so we could look for some potential sells within this area. We have this sort of supply here, and price also broke the low. So this would be, in my opinion, a riskier setup, but it is valid, so I'll set a limit here. Slightly bigger stop loss just to account for that, the fact that it is a counter trend setup. And once again, we'll target a 1 to 3, which aligns very nicely with this low just here. And I went a little bit quickly there actually. So the reason I'm taking this is we were in that daily supply to the left. Price took out higher time frame liquidity. We've then seen that shift of structure from bullish to bearish because price broke the most recent higher low. And the reason I set a limit on this area is basically because this is the last bit of internal liquidity. Internal meaning like it's this internal trend within the overall macro trend. And it's between the high and the low of this current downtrend leg. And it was also an imbalanced area of supply. So if price comes into that level, I'll be happy to sell. If it can come back for us. I think I may have just gone without us anyway. Yeah, okay, so I would delete this at this point. So what we can actually see is that price reacted from this 15-minute level just in here, which I should have identified, but on to the next trade. Like I said as well, I'm not really too fussed about the sells. The main idea was still buys, since price has not broken the hourly structure just yet, which was this low right here. So if we see, I think price just tapped into our limit as well, didn't it? So this was the area we had a limit set on. That's fine. It would have just missed anyway. Back to the buys though. What I'm liking now as well is that we've sort of formed these two highs, which I think will probably get taken out. So if price can sweep these lows into the demand, that's where we're going to look for the buys. Let's see, can we get buys here? going to change the color of the demand now as well. Okay, so nothing really too clean. We have this sort of demand in here, but because price has got so far away now, I would wait for a reaction within that area. All right, cool. So price is in that area. Let's have a look what happens. Yeah, so price didn't respect that area anyway. Okay, so what we've seen here, this was our area of demand. Price has now swept the low with this wick right here. So if we can break this structure, I'm going to still consider the buys. So we'll just mark that there. Need to see a closure above the area. There we go. Okay, so the area of demand that I would look to enter from would be this one. So once again, exact same setup as always. Sweep of liquidity, and in this case, a sweep of the demand as well. Overall bullish, higher time frame. 15-minute broke structure. We've left this area of imbalanced demand, and price has now started to sort of consolidate above it, build in that area of liquidity. So we'll set a limit here. Stops probably 30 pip stop, and I'm just going to target, as always, a 1 to 3 with this system. So in the live market, I probably would target this high instead, but for this video, as I said, we're only doing 1 to 3s. And let's see if price pulls back into our zone. And I would keep this limit activated until this high is taken out. If this high is taken out before price pulls back, then I will just delete it. Cool, so tagged in. Let's have a look what it does on the lower time frames. Ideally, we want to see this high broken. There we go, so it's looking good. So if you had missed this initial entry, I would probably enter, you know, like around sort this region. Gonna just play it on the 15-minute now. And there we go, 1 to 3 hit. And like I said as well, if you had missed this initial entry, price gave a 5-minute confirmation as well, because we broke this structure, which was that most recent low high. It then retested into this demand. So we would have entered something like this. Again, a 1 to 3 target. If I was already in this bottom one, I wouldn't have entered this though. So that would only be if I missed the original entry. But yeah, there you go. That one would have also played out. Depending on your rule set as well, if you had entered this previous one, like we just did here, you could have always made this break even once you entered this, and then you have basically, you still only have 1% risk, but you've got sort of double the position size. So yeah, what can we see price has done now? Okay, so it did react from this daily supply, but it has failed to break any structure because this was, like we said before, this wick right here was the main hourly structure, and that's what I would really want to see broken before looking for sells. Not really seeing too much now. Price is kind of just, you know, in this consolidatory phase. keeping in mind as well that if we go back to the daily, we can see that price has reacted from this daily supply. We have this wick down here, so it is likely you will see a bigger retracement, perhaps into our daily demand just down here. But I wouldn't sell just yet, just because we haven't broken any structure. So let's have a look. Just going to play price for a bit. Okay, so right, so price reacted from this daily supply. It hasn't yet broken this wick, but as you can see by the way price is moving, it is very high probability that price will gravitate towards this wick. So I'm just going to mark it on as a point of liquidity. And in this sort of situation, I would look for sells down to that low, just based on the momentum that price has at the moment. You can see we've reacted from supply and price has just simply melted from that area. The body of this candle also closed below this, which was the higher low. So it seems very likely that price will sweep this low at least before we see any more buys, or maybe come lower into our area of daily demand as well. So based on that, what I'm going to look to do is trade this sort of internal hourly trend where we've had a break of this structure after price reacted from supply. And within this range between the high and the low, what I'm currently looking at, or what I've seen, is we have this area of supply in here, which broke that low to the left. If price breaks this one and comes higher, we also have a higher level of supply up here. But for now, let's see if price can pull back into that area, which looks likely. There we go. Cool. So price has wicked into that area of supply we marked. All of these sellers have been taken out. More significantly, this one was taken out, which was the last bit of liquidity before this imbalance just above. Cool. So what I do now, as I do with every trade, we can mark on the most recent structure, which in this case would be this low right here. But this is only a wick below. I need to see a closure. Cool, so there we go. And the whole area where I would look to enter from, obviously we have this 5-minute supply up here, which after the break of structure, we would look for price to retest into. We have all of this liquidity as well, which, you know, price is likely going to come off and sweep before we head lower. But on a situation like this, rather than having a really tight stop loss like this and targeting all the way down here, I would much rather just enter with a slightly bigger stop loss, again targeting that 1 to 3 like this. And the reason I put my entry here is because this wick, as we can see here, is the last liquidity basically between the high and the low. So once price sweeps that, you will almost definitely see some sort of reaction to the downside, if not, you know, a complete move. So let's see what happens. I like this as well. If we have a look, we've had like a build up of all of this liquidity just in here. So if that gets swept, you will likely see price move in the opposite direction. Or it might just completely miss us like that. Yeah, okay. So I'm going to cancel this limit now. Let's have a look at what we could have done better. So actually zooming out on the 15-minute time frame, price reacted from this 15-minute area, which we should have identified, but that's fine. Actually, instead of, so we've had a further break of structure here. Just going to mark on some of the mitigations. So it came to the hourly supply. This was the initial break of structure. Price came up. retested supply, broke structure again, and now it is pulling back towards this area of supply. So this is another sort of entry model I have, and I would just set a limit on this supply. Stops just a little bit above in case price wants to sweep it. And again, 1 to 3 target. Like this. That's looking good. Cool, so there we go. Very simple trade. So this second entry model, I haven't gone too much into it on the YouTube, but all it is after price mitigates that initial area, after the change of character, I'll wait for another break of structure and then a pullback into an area of supply, which is in a premium of that current range. And that's really all it is, as simple as that. So we'll keep playing price. We're expecting it to take this low now. There we go. Going to keep on the main mitigation just there of that hourly supply. And cool, it also took out that 4-hour low that we said was likely to get taken. Cool, and price is also approaching our daily level of demand now. You could also view this as a 4-hour break of structure in the opposite direction to the trend, so this is a change of character. After we reacted from daily supply, that is why this is valid. So if we get rid of all of these actually. So main 4-hour break of structure, but overall the daily time frame is still bullish. So we're expecting a reaction from this demand if price can come into it. But for now, we're looking to sell down towards that level. And I'm going to mark on some of these hourly structure points as well. So we had that break. Let's have a look what price does. Right, so where did price come into? To the left. Cool. So another confluence that I like to use sometimes as well is, let's say I'm looking for sells. One of the confluences would be that price has not come into a significant area to the left. And what does that mean? A significant area would be, you know, a higher time frame demand as we have down here, or a sweep of some higher time frame liquidity. In this case, price did neither of those two things, so we are looking for it to come further down, and it has also just come into this supply. Swept some previous sellers. I would just consider this like an inducement rather than a main structure, just because, you know, price is always going to come and sweep this to fill the imbalance above and sweep some previous liquidity. If price comes higher than this supply, then that would kind of invalidate the sells for me, and I would look for buys. But for the time being, let's have a look at how price reacts here. Currently, I would want this low to be taken out before selling. Okay, so now I'd want this low to go. And we need a closure below. There we go. Very nice. And once again, you could over refine the entry and look for, you know, a retest into this 5-minute zone. But for myself, I would rather just enter on this whole zone just here. Reason because, same as last time, this is the last bit of liquidity in this range between the high and the low. So you will very likely see a reaction from this area. And if price does go higher than this, then it will likely come up and sweep this high, in which case we are wrong and we don't want to be in the trade. So I'm going to set this and target a 1 to 3 as always. In the live market, I would target this low, which only works out as 0.2% more anyway. But let's set this limit. I really like this as well. Look how correctively price is moving, building up lots of liquidity. There we go. Price has tagged us in. Notice the reaction. This was the last bit of liquidity. Once price sweeps it, we get that move, and price has no reason to hang around, so we should get a drop. Nice, so there we go. Same setup again, very simple. Area of higher time frame supply, lower time frame breaker structure, and then a retest into a key area. So let's have a look. Price is approaching that level now. Cool, so there we go. Price is in our daily area of demand now, so we can kind of stop looking for the sells. I think the sell move is done. So I'm just gonna delete some of this to clear up the chart a little bit. Get rid of this as well. So I'm just gonna refresh. What I like to do periodically throughout my back testing is just go back to the higher time frame to remind myself of where price is on a macro scale. In this case, we obviously had the reaction from demand, broke structure on the daily, and now we've retested into daily demand. So we're looking to see how price reacts to this level for some potential buys. Yeah, currently you can see we just had a lot of bearish momentum coming into this zone, so we would have to wait for price to sort of slow down first of all. Let's have a look on the 15 minutes what it does. Cool, so based on the way price is moving right here, what we would look for, price was consolidating, we get that stab of liquidity. If price can break this high, then I'll look for some buys. And there we go. Like I said, once you see this price move away from the level, start to consolidate, and then we sweep the lows, it is very likely you will see a push like this. Just basically, if we're thinking about that logically, people were buying here for the same reason as us, that price was in that daily demand. But in order for price to move, it needs to sweep some liquidity. So it takes out all of these people. It also takes out anybody entering sells after a break in retest. And what it's going to do now, more than likely, is retrace to take out any of the breakout traders that are doing something like this, targeting maybe up here. More than likely, these people are going to get taken out, and that is why we wait for the retracement. In this case, what do we see? So the whole area of demand I would look to enter from would be this zone, conditional on the fact that, conditional on the event that we have some liquidity above it. So for now, just gonna let price do its thing. Oh, so sorry, I reacted to that a little bit too late. What we should have been doing was looking at all of this, like price begins to consolidate above the zone. This was probably news, but news takes out all of these people into that area of demand and then break structure once again. That would have been a very nice trade, and I would have set the limit, but annoyingly I played price a little bit too fast there. But yeah, what we're looking for price to do now, we've had this very bullish reaction, simply looking for price to come up and target these highs. Since it did come into daily demand, you would expect a lot of volume to come in now. And yeah, there we go, more volume. Let's have a look where price could come into. So this zone I would currently look at as a potential area. I like how corrective this is moving as well. We formed these two equal lows. Just going to mark those on. Cool. And in a case like this, where we have demand below all of these equal lows, I wouldn't consider this a breaker structure to look for buys within this range, because I would look for price to sweep this before heading higher. So let's have a look. There we go. Price is in our area of demand. Overall still bullish, and if we look left, it did sort of sweep this liquidity, but you wouldn't expect a complete reversal from there. If we look on the higher time frame, it's kind of just came into this random area, and I don't think that carries enough weight to send price completely back down to the lows. So let's have a look at how price reacts here. This would be the last area I would consider buys until price heads down to this wick. So if it doesn't react here, then we can look for some sells. But for now, let's have a look. Current structure, I would want to see it break before the buys would be this one. So if we mark that on, see if price can break that level. So in a live situation, all I would be doing now is simply waiting for that level to break. I'd have an alert set there, and I wouldn't be watching price until it breaks here. Or if it breaks this low, we can then look for a new level of structure for it to break. So I would also have an alert set at the low, but until then, not really anything to do. Okay, cool. So this looks nice. We had a break of that structure to the left. Price has formed this area of liquidity above this area of demand right here. So I would set a limit on this. Stops just below here. If price, it may want to sweep this because this is the last bit of liquidity within the range. But if it does go below here, it's going to likely take these lows. So going to set a limit there and target this high. Maybe have a bit of a tighter stop. Sorry, not target the high, target a 1 to 3, but it kind of aligns very nicely with a 1 to 3. So let's have a look. Okay, so price did sweep that demand. Nice reaction. And there we go. Very nice. So once again, very simple stuff. I identified an area of demand after price swept liquidity. We then wait for a break of structure and a pullback into some area of demand, which it has to be imbalanced as well. Now we can look to continue and follow price up. We've had a break of this structure. Next level where we would consider buying from, well, at the moment there isn't one, so I'm just going to play price a bit more. Okay, so now I would consider this one. Now, this basically became valid because price continued up a bit more, built some liquidity above it. So let's have a look. Actually, we do have this one instead, which I think is more likely. Cool. So one thing with gold is that once it makes these big moves, it nearly always kind of builds up this mini structure, but then it will come down as it is now. Take out all of this mini structure and then fill in all of the imbalance. Once again, looking left, it hasn't reacted from anything significant. We also have all of these highs up here, so you wouldn't expect it to reverse before that's taken out. You could probably say price reacted from this demand as well. Maybe we could look for some buys here, but let's have a look what it does first of all. Yeah, so that level was broken. We did get a small reaction from it, but nothing I would have taken. And price has now come into our area of demand. We've had once again, gold nearly always does this. We have like an initial push away from the demand, and then we sweep the initial push, and then it does the real move like that, where we get the breaker structure just there. And I'm not seeing any entry points at the moment, so I'm just going to play price. Actually, I think I just missed that, so I would have... Nice reaction from here. Bit of a late entry, but I'm just going to enter here. Bigger stop loss all the way down here below the wick. And we're going to go for a 1 to 3 up here. And the reason this is valid still is because we're expecting price to come to this high anyway. So I'm going to place that. Market execution on this one. Ideally though, if I hadn't played price so fast, we would have entered here via a limit. And one thing that I have found recently is that it is better to kind of have, rather than trying to predict the exact entry point and having a sniper entry, it's kind of just better to have a bigger stop loss and put it at an invalidation point. So, you know, if price comes down here, then the trade is invalid because price will likely head back to the lows. But until that hits, basically this trade is still valid. It is more of a swing position, but that's completely fine. I have no issues against that. Nice, and there we go. So now, even though that was a 57 pip stop loss, we still made 3% on the trade, so it doesn't really matter. And can price break the high? There we go. So once again, price broke the high. Very clean structure forming at the moment. And like I said, we're still looking to target, I'm just going to mark this on. This high right here is the main target. We have all of this trendline liquidity, so it is very unlikely price will reverse before taking that out. Cool, so let's have a look. Price left all of these highs, so that kind of gives us another confluence for why price may head higher. You know, it's very unlikely to reverse until this is taken out. We've come into this area of demand. It took out all of these liquidity points, which I'll mark on. So all of this got taken out into that demand. And what we would wait for now would be a 5-minute breaker structure. Just there. And then, as with every single trade, we just wait for it to retest into demand. In this case, we have this one, which created imbalance too. Stops below the low. 1 to 3 target. That was meant to be a limit. Cool, there we go. Very nice. Price pretty much flew straight to the take profit. Entry could have been a little bit better. You know, price came and swept the bottom of the demand instead. But like I said in the previous trade, I would rather not try and predict the exact reversal point. I would just have, you know, basically a more conservative stop loss, I would say. Just looking for a price to retrace into the demand and then have stops below the low, rather than trying to get a sniper entry and predict the exact point that the market's going to reverse from. Cool, so what I would look for now, we've had this another breaker structure. This is the low, this is the high. We have this sort of hourly level of demand. If price can retrace into there, I would be happy to consider some buys. Once again, price has not taken out our liquidity level yet, so still looking to buy. There we go. So again, it also left these equal highs. So let's see how it reacts within this zone. And the structure we want to see it break is this one. There we go. So we get a closure above it. Not really seeing a valid entry level just yet. Cool. So actually now we have this demand. Why is this one valid? Well, it broke structure, it's left imbalanced, and now we also have this liquidity resting above it. That's basically what I was waiting for it to become validated. So I'm going to set a limit here. Again, a little bit more of a conservative stop loss instead of having it, you know, very tight like this, which I see a lot of people doing. I'd much rather just have a bigger stop loss with a higher strike rate. And as always, we're going to target a 1 to 3. You know, you would expect all of this liquidity to go here anyway, so a 1 to 3 is nice in this case. Like that. Set the limit and see what happens. This is still valid at the moment, so I'm going to keep it. There we go, tagged in. Very close to stop loss. It's not looking too good, to be honest. There we go. So almost hit stop loss, but that's basically what I was talking about, where you don't always want to have a very tight stop loss like this and try and predict the market too much. You want to kind of allow it to do its variability and allow sort of the variance of the lower time frames to be in your favor by having a bigger stop loss, because you don't really know, to be honest, unless you can predict the market to the exact pip, whether price is going to react from here or whether it's going to come lower, sweep some more liquidity. But the main thing for the setup to be valid was that price came into the demand. We then had a break of structure followed by a retracement. And that's really all the setup is. Very simple. Best not to overthink it as well. Cool. So we are looking for price to come up into these highs. So since it has started to retrace, we can look for a potential re-entry. Now that price has broken structure again, following this 15-minute trend. So initial break of structure, pull back, push up. And what I would look for, which price has just done, it retested into this demand, swept some previous lows. Also left these equal highs. So let's have a look. So actually we played that too quickly once again. So the entry would have been on this area of demand in here. You can see how price swept the low, broke structure, retest into demand. But I played price too quickly, so we missed it. And there we go. So price has now taken those highs to the left, which we were looking at, which was, those main daily highs, which we were talking about. So now I'm going to delete all of this because it's irrelevant. So another thing for this strategy as well is that we're only following this internal trend as long as the external highs and lows aren't taken out. So for instance, now that price has taken that external structure, you would expect it to come lower, take out some of the previous liquidity within this range, and come into one of these areas of demand. But you would at least expect like a sweep of some of this previous liquidity, unless it just continues straight higher and then does a small retracement, which could always happen. But I'm going to mark on this now as the daily break of structure. Cool. And the macro target would be obviously this high. Based on, if we have a look left, all of this now is efficient price action. So you wouldn't expect price to come within this area and suddenly reverse back down to the lows. It needs to come up and at least sweep this high because that's the main liquidity it's targeting. On the 4 hour, I'm not currently seeing any points of interest. So let's just play it a bit more. Cool, there we go. So like I said, either you get a retracement to sweep some of the internal liquidity, or it just continues straight up, in which case we can look to adapt to some new levels. So let's have a look. Okay, so if we go back on the 4 hour, we can see that price is just consolidating very correctively. On the 15 minute, we've had a sweep of this low. It also broke this 15-minute structure. And going back on the hourly, this is why I stopped, is I saw this area of demand just here, below these lows. So let's see how price reacts within here. Also going to draw this on to remind me, we've seen a sweep of these lows. So let's have a look. Cool. The demand was swept, but this is still valid for now. And I'm just going to enter here. Stops below this low. The reason I'm entering here is we had that break of structure. Price came into this area of demand, which I'll mark in blue. And once again, 1 to 3 target all the way up here. Market execute on this because we played it too fast again. Cool, so that's looking good. Once again, what I want to say mainly in this video about this strategy is that you don't need to have a stop loss like this literally just below the demand. We can have it below the low because price will very often do something like this where it comes lower, sweeps your area of demand and then continues up. Particularly on gold, that nearly always happens. But there we go. The trade played out very nicely. And yeah, it also broke that main high to the left. So let's see what it does here. Yeah, so probably just continue straight up. Okay, I also think this video is getting quite long, so I'm going to end it here. If you guys would like me to do a part 3 where I continue this testing, make sure to comment below. Obviously, we're getting very close to the present day now as well, so it is getting kind of a biased sample, I would say, because obviously we know what happens higher time frame at least, because we've just seen it play out. So I may just stop the testing here. I already have around 3 years worth of data on this anyway, so that is more than sufficient. And I don't want to bias the sample as well and say, oh, this strategy has an 80% win rate, when in fact the 80% win rate only comes from the fact that I sort of know what's going to happen next. Because obviously, if we go back on the daily, because this has only just happened this year, I know that price is definitely going to break this high, for example, and that's obviously going to help us in our analysis and make it a lot easier for us. So I don't want to bias the sample and enter trades which I obviously know the outcome of, because that's unrealistic. We don't know the outcome in the live market. So if you guys would like me to do a part 3 and go through some of the trades that I've taken this year so far in 2024, make sure to comment below. But if you guys did enjoy the video, make sure to like and subscribe, and I will see you in next Friday's video.